Guys, last week we have seen that the S&P 500 made an all-time high at 6699.53, and only by a few cents S&P 500 failed to test or hit the 6700 psychological mark. And then from Tuesday onwards we have seen bearish movement, but on Thursday the S&P 500 managed to retrace back, and then on Friday it gave a green closing. Now this will happen, the fall will happen, this is what we knew, because in the previous S&P 500 weekly technical analysis and also in my daily updates to my Patreon community members, I have mentioned repeatedly that now the S&P 500 has hit the saturation and also the overbought condition. This means any more bullish addition will make it unstable, and that instability will bring it down. So as of now, the bullish room will remain limited to the 6700. Only when it hit the 6700 psychological mark, it will be able to move into the 6700 range. Otherwise, it will not be able to move, and then it will have to come down. Come down, but in what manner? For that, we need to understand how the S&P 500 behaved in the previous week. On Monday, S&P 500 moved up, and when it breached the Friday's closing, that was 6664.36, then it has added more volatility and added more weight to itself. That is why in my first update I mentioned that the S&P 500 has made itself unstable. It is technically unstable here. And also on Monday, one more thing has happened. That was the high. It failed to hit the 6700. The maximum, the all-time high it made on Monday was 6698.88. Okay, so it did not hit the 6700. And then on Tuesday morning, when the S&P 500 opened at 6692, around 6692, it tried to move up. It was shy of the 6700. This was very much clear that the bearish side will not be triggered as long as the Dow Jones is trading in the open equal to low condition. And once the Dow Jones comes out of the open equal to low condition, in that case the S&P 500 will fall. It will fall heavily. But the most important part on Tuesday was the closing, because there was very heavy bearish candle on Tuesday. It failed to hit the 6700. So next day we were expecting bearish movement and initial or intraday bearish movement on Wednesday, but with a condition that this bearish movement will be limited to the 662x zone only. And in my midday update here I mentioned that the maximum the S&P 500 can lose is the 662x zone only. So the S&P 500 gave two red candles on Tuesday and Wednesday. So it was very much clear that now there will be a gap down open, or irrespective of any open, an initial or intraday bearish movement on Thursday. So there was a good gap down open. S&P 500 came down. The most important thing that has happened on Thursday was the 6600 mark. And in this, the first update I mentioned that now the first hourly candle of the SP 500 is clearly a bullish candle. And because of this closing, next day some bearish movement was expected on Friday. Okay, it was there. This was 660x was the zone, very heavy zone. A sustained movement above 660x means intraday it is free to move up to the 664x. That's it. Okay, and when it moves up to the 664x, then it will fall, because it will not be able to sustain beyond the 664x. So within first hour it moved up, fall. Now S&P 500 is going to trade in a very narrow range. Okay, and this is seen after a very long time. This means that now S&P 500 will have to decide whether it wants to move up or if it will simply give up. I will discuss all of this, the range, the conditions, everything in detail in this S&P 500 weekly technical analysis, which is for the week of September 29th, means from September 29th, which is Monday, to October 3rd, that will be Friday. So now guys, before I proceed further, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you want to get these daily precise updates of the S&P 500 every day from Monday through Friday, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now guys, let me tell you that I have divided this S&P 500 weekly technical analysis in two parts. Okay, in the first part, I will discuss the technicals on the weekly as well as on the daily chart. In the second part, I will give you the probable movement. Okay, probable movement means what is going to happen. Just like last week that it will be unstable. Because it will be unstable, okay, then it will have to give up. But it will remain safe as long as it is not breaching this mark. This means that it will trade in between 6,700 and 6,551. So similarly, I will give you the probable movement here, okay, in the second point of this, the agenda. Now I am going to begin with the first part, that is the weekly and the daily chart, the technicals. Okay, I will discuss the candles and the technicals, everything here, and I will tell you whether the market is in the short, whether the market has entered into the short-term bearish trend or is continuing its long-term bullish trend. Now guys, I am going to discuss the first point of the agenda or the first part, and here I will discuss the weekly chart and the daily chart. Okay, the technicals, the candles, everything. First, I will cover the weekly chart candles and the technicals, and then immediately the daily chart candles and technicals. Okay, now weekly chart means one candle represents 1 week. So this is the first, the weekly chart. On the weekly chart, this is the last weekly candle. Okay, it's a normal red candle, but the good thing is that the closing, the open and closing of the candle is above the 50% of the candle itself. Okay, it is bullish. So even though the color is red, but still it will be counted as bullish. Okay, but this candle does not indicate a gap up open on Monday. Okay, it simply indicates an initial or intraday bullishness on Monday, right? Now let's analyze the last weekly candle of the Dow Jones. Okay, the same candle here. So it is also indicating an initial or intraday bullishness on Monday, the weekly candle of the Dow Jones. Both of the candles are indicating an initial or intraday bullish movement on Monday. The weekly candles are indicating. Okay. Now, in terms of the technicals, okay, on the weekly chart technicals, the S&P 500 is bullish through the Ichimoku cloud, Bollinger Bands and moving averages on the weekly chart, right? The MACD and the stochastic RSI, well, MACD is still bullish. There is a very little change in the stochastic RSI, but it is still bullish. It will still be counted as bullish. Okay, but now because of that little change, the S&P 500 will not be considered as 100% absolute bullish. Rather, it will be considered as 90% bullish. 90% bullish. Remember, the weekly chart means the long-term picture, the long-term trend. 90% bullish means the trend is still bullish or absolute bullish. Not 100%, just 90 or 95%. Okay. In terms of the Dow Jones is also bullish through the Ichimoku cloud, moving averages and the Bollinger Bands on the weekly chart. And the Dow Jones is, Dow Jones is absolute bullish because the MACD and the stochastic RSI of the Dow Jones are absolute bullish. Okay. So in this case, the Dow Jones will be considered as 100% absolute bullish on the weekly chart. Okay. Whereas the S&P 500 was 90% bullish. This clearly confirms that the long-term trend is still bullish. Long-term trend is still bullish. If it is still bullish, then is there any problem? Well, yes, there is a problem. That problem is actually in the Dow Jones because Dow Jones is hitting the overbought conditions. Okay, overbought condition. This means that more bullish movement or a green bullish candle or a green weekly candle of the Dow Jones in the next week will add more saturation to the Dow Jones. Means it will then further add more weight. Okay, so Dow Jones is now going to create a problem for the S&P 500, but because of the absolute bullishness on the weekly chart, the market is absolutely bullish. The entire market is in a sustainable bullish condition. This will change. This will change when a specific bearish condition is seen. Okay, and this I will discuss in the next point, that is the probable movement. So now that we have seen that on the weekly chart, the market is absolute bullish, heavily bullish. The only problem is because of the Dow Jones, which has hit the overbought condition. Any more bullish addition in the Dow Jones will trigger more bullishness or will add more weight to the Dow Jones. Okay, and when the Dow Jones is heavy, then it will bring down all of the indices, the entire market with itself. Okay, now let's verify if the same is seen on the daily chart or not. So now this is the daily chart. Now guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate. Give a thumbs up, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, every day, then you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So now this is the daily chart. So let's first analyze the candle. So this is the last candle of the S&P 500 formed on Friday. Okay. This is a heavy bullish candle. This candle is indicating an initial or intraday bullishness on Monday, but is not indicating a gap up open. Okay. The same condition was seen on the weekly chart, right? Let's analyze the last candle of the Dow Jones. It is also a bullish candle, but it is not as heavy as the candle of the S&P 500 is. Okay, but is still bullish, indicating an initial or intraday bullishness on Monday. So now it is confirmed that irrespective of any open on Monday, okay, there may be a gap up or may not be a gap up or may be a gap down. Okay, but irrespective of any open, there will be an initial or intraday bullishness on Monday. This is confirmed. Okay, let's analyze the technicals of the S&P 500 on the daily chart. Okay, again, S&P 500 is bullish through the moving averages, through the Ichimoku cloud, through the Bollinger Bands on the daily chart. The S&P 500 is bearish. Okay, yes, a big change, big change. S&P 500 is bearish through the MACD on the daily chart. S&P 500 is also bearish through the stochastic RSI on the daily chart. This is bad because this is going to put a downward pressure, a bearish pressure in the S&P 500. Okay, so so it is not overbought, it has not hit the saturation. Okay, but there will be a perfect condition for a heavy fall that I will tell you. Okay, after this. So as of now, the S&P 500 is 60% bullish on the daily chart. Remember, MACD is bullish, MACD is bearish, stochastic RSI is bearish on the daily chart of the S&P 500, indicating bearish pressure. Whenever there will be any confusion, then what will happen? Fall. If it moves up for 1 or 2 days, if it try to move up or if it goes green, it will hit the saturation. But because the MACD and the stochastic RSI both are bearish, this means that there will be a heavy or a sudden fall. Because any more bullish movement will add more saturation and the overbought on the weekly chart. Then that weekly chart will make the S&P 500 unstable. And because the MACD and the stochastic RSI are already bearish on the daily chart, there will be downward pressure. Means fall. Okay. So in case of confusion, a fall. In case of continuous bullish movement for 1 or 2 days, fall or good fall. Okay. Now let's analyze the Dow Jones. Dow Jones is bullish through the Bollinger Bands, through the moving averages, through the Ichimoku cloud on the daily chart. Dow Jones is okay, perfect bearish condition. Dow Jones is also bearish through the MACD on the daily chart, and Dow Jones is also bearish through the stochastic RSI on the daily chart. A perfect condition. Okay, exactly the same that is seen on the daily chart of the S&P 500, 60% bullish, and any more bullish addition means more weight, fall. Confusion, fall. So even though the long-term trend is bullish, no doubt that the long-term trend is bullish, but in the short term, okay, more bullish movement will trigger the fall. Now, whether this fall will be heavy or will be limited, okay, that I will discuss in the next point, that is the probable movement. But for now, okay, it is now very much clear. Any more bullish addition will make the S&P 500 and the Dow Jones unstable and heavy. And then the combination of the bearish MACD and the stochastic RSI will trigger the fall. If there will be any confusion, then also the fall. But guys, you need not to worry about anything, because whatever will happen or whatever is going to happen, I will keep you posted. I will keep you updated through these daily precise updates which I give to my Patreon community members every day from Monday through Friday. Monday, Tuesday, Wednesday, Thursday, Friday. Pre-market analysis before the open of the stock market, first update after 1 hour, midday update after 3 hours, final update 1 or 2 hours before the open of the stock market. In this manner, doesn't matter how volatile the market is, you will know where the market will be heading to, what is the tiebreaker, what will trigger the bullish movement, what will trigger the bearish movement, and also what will the bullish limit, bearish limit, everything. And guys, it's not just about these daily precise updates which I give to my Patreon community members every day from Monday through Friday, but I also gave the opportunities in the premium stocks and the ETFs. Okay, every week minimum 5 to 10 opportunities. And that's not all, because I also give the mid-week update. This is a video technical analysis that I give to my Patreon community members every Wednesday or Thursday. In this video technical analysis, I discuss all of these cases. In the last week, I've discussed the bearish case, and that was there. So guys, whenever you want to join my Patreon community in order to get all of these, the daily precise updates, the premium opportunities, and the mid-week update, then for that I have given the link in the description of the video and also in the comment section. And when you follow that link, then you will see that this is my Patreon page and this is my Patreon profile. And here you will see this tab. This tab says membership options. And when you click on this tab which says membership options, then you will see these 3 tiers or 3 levels: level 1, level 2, and level 3. Level 1 and level 2 are same. The only difference is the geographical location. When you subscribe to either of these 2 levels, you will be getting all midweek update videos, daily precise analysis updates, movement levels and zones, and the stock market opportunities minimum 5 to 10 every week. This is level 3. It is a premium level. Whatever you are going to get here in level 1 and level 2, by default you will get all of that in this, the level 3. Other than that, there will be a one-on-one Zoom video meeting. In this one-on-one Zoom video meeting, I will share with you all of these, the secrets, the hacks, the strategies, secret strategies, options, everything. And guys, if you notice, many people have joined my Patreon community for last many days, weeks, months, years, and they are getting these daily precise updates every day from Monday through Friday, as well as the stock market opportunities in the premium stocks and ETFs and the midweek update. So guys, whenever you want to join my Patreon community in order to get all of these, then I have given the link in the description of the video and also in the comment section. And you can follow that link to join my Patreon community, and you are welcome. Now guys, I am going to discuss the second and the last point of the agenda of this S&P 500 weekly technical analysis, which is for the week of September 29th. Means from September 29th, which is Monday, to October 3rd, that will be Friday. Now, so next week will be mostly blank. The only thing is that on Tuesday, the JOLTS, job opening data, will be released. However, this data is not expected to influence the movement of the market much. But on Friday will be very, very important, because on Friday, the non-farm payroll data will be released and also the unemployment data. Recently, the Feds have shown their concern regarding the labor market. This means that this non-farm payroll data and the unemployment data will influence the movement of the entire US stock market heavily on Friday. Okay. So, but before that, until Thursday, the market is in a condition to sustain. Okay. So that won't be a problem. Now, in terms of the numbers, okay. So what we know here is that, first of all, yes, it was the Dow Jones. As of now, the Dow Jones can move up to what? Dow Jones can move up to its all-time high, that is 46,714. 46,714 dot how much? .27. Okay. Now you need to understand that there is a very special condition. This candle, if you notice, this candle that was formed on 23rd of September, Tuesday. Okay. This candle indicates a reversal. It is a reversal candle. So if you notice in my first update on Tuesday to my Patreon community members at 10:30 a.m. Eastern time, around 10:30 a.m. Eastern time, okay, I mentioned that, okay, indicating this, that if the Dow Jones closes below the open price, okay, on Tuesday, that was 46,364.11, that this can trigger a reversal from here. Because historically we have seen the same happening, especially through the Dow Jones, okay, when such kind of pattern was seen. This means that during this, now this the bullish movement, okay, if the Dow Jones fails, if the Dow Jones fails to clear or breach its all-time high, then most likely this will trigger a reversal. One more thing, when the Dow Jones moves up, okay, we will get the first indication of the bullishness only when the Dow Jones closes below the open price of this candle that was formed on Tuesday. Open price was 46,364. 46,364.11. That was the open price of this candle. When the Dow Jones closes above 46,364.11, this will bring more bullishness in the entire US stock market, including the Dow Jones. And that bullishness will be triggered by the Dow Jones. Okay, but this bullishness will not confirm that there will be more bullish movement. Why? Okay, because in the first part I have shown you that the MACD is bearish, stochastic RSI is bearish, and it is bearish in both of these the cases, in the S&P 500 as well as in the Dow Jones. Okay, this means that the bullish side will struggle, will be limited. Okay, even if the bullish side happens, this does not guarantee that this will be the continuation of the bullish movement until and unless either in the S&P 500 or in the Dow Jones or in both, this combination, it cancels out each other. Okay, the MACD will not turn bullish as of now. Okay, it will take some time, but yes, the stochastic RSI can change to bullish. For that to happen, a good bullish candle continuously for 2 days must be there. Then the stochastic RSI will change to bullish. Then this will cancel out, okay, the bearish condition. Then only it will be allowed, otherwise not. Okay, this is so Dow Jones will okay, so the Dow Jones will trigger, okay, that the bullishness through Dow Jones will come to know bullishness is there or not. In case of the S&P 500, the bullish movement will be limited to what? It will be limited to the 6,700 psychological mark. Okay, very clear, because the S&P 500 has failed just below the 6,700. That is why it will remain hesitant, and this can trigger a very heavy fall. Again, the same condition, bearish MACD, bearish stochastic RSI. If there will be any confusion, this means fall. Why? Because bearish MACD, bearish stochastic RSI, confusion means fall. It will follow the direction of these two. Okay, if it moves up, it will add more weight to the Dow Jones, to the S&P 500, and that will then further trigger fall. This means that irrespective of anything, okay, whether there will be a confusion or not, okay, whether there will be a bullish movement or so, there will be a fall. This is clear. Now the most important part is that how long the S&P 500 and the entire market can save itself. Very clear. Okay, but before that, the bullish side, let me just confirm the bullish side, because as of now the bullish side is limited to or is just around 0.80% to 6,700 mark. Okay, yes, if the S&P 500 somehow, if the S&P 500 breaches the 6,700 mark, okay, then it will bring more bullish sentiments. These bullish sentiments will be able to counter the bearishness which is caused by the combination of the MACD and the stochastic RSI, and this bullishness can force the stochastic RSI to change to bullish. When the stochastic RSI changes to bullish, perfect, everything is perfect, because then stochastic RSI and MACD will cancel each other. Then it will be allowed to move up. In the 6,700, it will be moving up, and because now there is a room in the bull side, so this means that a little around 6,700 it can move up. But remember, it is not free to move up every day. Why? Because after 1 or 2 days, after 2 days maximum by Tuesday, it will hit again the saturation, overbought. Okay, this will be seen in the S&P 500. This will be seen in the Dow Jones. This means that even if it enters into the 6,700, then also there will be struggle. It won't be able to move up in the 6,700. I think around in the 671x. I think in the 671x, okay, it can fail in the 671x. Okay, if it continue to move up, right? So bullish side for now will be limited, okay, because there will be a fall because of the overbought and the saturation. The bearish side, well, bearish side is very tricky, okay, and is very interesting. Okay, so a fall, there will be a very heavy fall when this condition is fulfilled in the, especially well, in both of these the cases, in the Dow Jones as well as in the S&P 500. So what is this special condition? Guys, before that, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And so far, if you have liked this video, then hit like to appreciate, and your appreciation matters a lot. And if you want to get these daily precise updates of the S&P 500, Dow Jones, and in a manner to the entire US stock market every day from Monday through Friday, Monday, Tuesday, Wednesday, Thursday, Friday, as well as opportunities in the premium ETFs and the stocks of the US stock market and the midweek update, then for all of this, you can join my Patreon community. I have given the link in the description of the video and also in the comment section. Now the bearish side, okay, very, very interesting. First comes the low of this candle. The low of this candle is 6569.23. This is the low of the candle formed on 25th of September. Everything will remain good, well, perfect, as long as the S&P 500 is not breaching this candle. Sorry, breaching this, the low of this candle. This mark must not be breached. Now, irrespective of anything, if or whenever the S&P 500 breaches this mark, then what will happen? This will trigger a fall. Okay, but immediately after this, in the 655x, there is very heavy support zone. This support zone will hold the fall. Okay, but because of this breach, there will be the bearish sentiments. There will come more bearish sentiment. This means that this zone will be able to hold only for, like, you can say 2 to 4 hours. This is heavy. That is why it will be able to hold for 2 to 4 hours, but not more than that, because once this mark is breached, once this low is breached, okay, then there will be more bearish sentiments. This bearishness will be 2 times or 4 times if the S&P 500 comes down and breaches the low of this candle, that is 6551. Okay, first breach is 6569.23, second one is 6551.12. If the S&P 500 breaches both of these two, then we will be ready for the short-term reversal. The short-term reversal will be there. And also remember, there is a pending obligation to the 655x. Okay, because when it moved up earlier, then it was supposed to trigger a short-term reversal from 655x. Okay, but it moved up and then it came down, okay, on Wednesday, 17th of September, during the FOMC event. It hit the 655x, fulfilled its initial obligation, but not the absolute. Okay, once this mark is breached, more bearish sentiments. Then this mark is breached, heavy bearish sentiments. Okay, because then this will indicate that there is a selling pressure on the entire US stock market. In case of the Dow Jones, similarly, in case of the Dow Jones, this is the mark. This is the mark. This mark is 45,785. 45,785. Then this mark. This mark is 45,667. 45,667. Okay, exactly the same in the Dow Jones and the S&P 500. Now, there is no such condition or no such compulsion that both of the indices must breach both of these marks. If any of these indices, either the S&P 500 or the Dow Jones, breaches these two marks, the bearish condition is fulfilled. Okay, means the bearish condition will be triggered. Then the other index will be forced, will be compelled to breach. Okay, so any index, either S&P 500 or the Dow Jones, and once this fall starts, then there will be a short-term reversal. Short-term reversal means S&P 500 will enter into 6,400 range, okay, and then in the 6,300 range. A short-term reversal maximum will be up to 6,300, okay. That will be 6,333/37. This is my calculated heavy support zone that I have disclosed earlier, okay. And again you have seen the magic of this zone, okay. Similarly, the 655x zone is there, okay, and other zones are there, okay, and all zones are magical, and all zones are strong, either strong support or strong resistance to the S&P 500 and to the Dow Jones. So at most this, okay, but first, okay, it will come down to the 6,500 range, then to the 6,400. In the 6,400, it will hold. It will hold. It will move up back to the 6,500. Then the second leg to the 6,300. So there will be a staircase pattern. Here. So in this manner, the bearish side movement will be triggered. And if all goes well, and see if the market remains reluctant or shows hesitation to come down, then by Friday it will be very much clear. If Friday the data is not if Friday the unemployment data and the non-farm payroll data is not as per the expectations of the Wall Street, then there will be a fall, very heavy fall. But guys, you need not to worry about anything if you are my Patreon community member, and if you are not, then you can join my Patreon community, because every day I will give you these daily precise updates, and during these the volatile times when the market is heavily volatile, is giving heavy swings, okay, through these your daily precise updates, you will be very well informed in advance what will be the tiebreaker, what will be the bullish side limit, what will be the bearish side limit, and if there are swings, then what can trigger that swing every day, okay. And also I will give you the premium opportunities in the stocks and the ETFs, and also the midweek update. So you can join my Patreon community. I have given the link in the description of the video and also in the comment section. So guys, if you have not yet subscribed to my YouTube channel, then please subscribe to my YouTube channel and hit the bell icon. And if you have liked this video, then hit like to appreciate, give a thumbs up, and your appreciation matters a lot. And guys, if you have any questions that you want to ask, then please feel free to ask your question through the comment section.